Perfect. Okay, thanks everybody for coming out to EthVan here on Thursdays at D-Control. We've got a few things coming up. This coming Tuesday, we've got your on-chain at 6 o'clock. And where is it at? Yaletown Brew. Okay, the Yaletown Brew Company. Okay, so if anybody, we've got some links for that in some of the group chats that are going on. So if you want to sign up for that, that's on Tuesday. And then I think the following Tuesday after that is the off-chain event at Andco. Also, it's starting at 6 o'clock. So yeah, just keep your eyes out for eyes and ears for those. You'll see those links kind of kicking around here throughout some of the chat groups that we're in. If you haven't already joined our Discord and whatnot, please do so. I think most of you have, but that's good. Yeah, sorry. Oh, we do have a POAP for today, yes. So after this, if you want to commemorate this amazing moment, we've got a POAP. So there's that black sign. I think most of you are familiar with this. I repeat this every week. There's that little POAP symbol. Just go take your phone, the NFC reader on, click, just put it up against there, and mint the POAP that says that you were really here and this really happened. So, yeah. All right. Well, I think we can get into it here. I think, we're no nouns run this weekend. Yeah, I think a few people are out of town here anyways. And probably not next weekend, the following weekend, because it's the long weekend. Everybody's going to be gone doing, I don't know, whatever you do on long weekends, but happy Canada Land Day. So congratulations. All right, let's get this going. Today we've got Ali with us here, and yeah, just looking forward to diving into this conversation here. So everybody, round of applause here. Say hi to Ali here. So.
All right, glad to be here. And if you haven't grabbed a drink, grab one. If you're finished one, go grab another one.
That was quick. Way to go. All right. Okay. Well, I think it's always great to hear kind of an origin story and how you kind of found crypto and how that all landed. What's the scoop?
Yeah, it's interesting. I mean, was living in Toronto and started hearing a little bit about Ethereum pretty early on. And so this is sort of pre-Ethereum ICO. Didn't end up getting into the Ethereum ICO, but was, in and around, started learning about Bitcoin, started going into that whole Reddit subthreads. And as everyone, I think a lot of us have sort of been through and went down that rabbit hole. And it just kept resonating with me more and more. And so later on, ended up buying some Bitcoin, kind of sat there for a little while. And then in 2016, actually, I moved. So end of 2015, I actually moved to Singapore. And while I was at Singapore, ended up actually thought I was way late, decided to move full-time into crypto. So made a pretty big shift. So in 2016, moved full-time into crypto, started a crypto exchange at the time. And it was a very different world. So if anyone's sort of familiar with a lot of the crypto exchanges, a lot of them didn't exist, right? So this is like pre-Binance, didn't exist, et cetera. So we started a crypto exchange. We ended up raising 3 rounds of capital, grew our team to 40 people. Very different world, sort of post, let's call it like June 2017, Binance launches. You had bans in China in September, if some of you guys remember that. And then the market changed a lot, I would say, sort of in that last half of 2017. We ended up selling our stake in the exchange at the end of 2017, and then we basically started Blockchain Founders Fund in 2017. So here we are, then 180 companies later or so.
Yeah, wicked. Okay, so what kind of what parts of the tech, I guess, excited you to make an exchange or get involved or see that crypto's gonna make it, or was the thing?
I mean, I think initially, I don't know if it was. Initially, I don't think it was so much that even purely from an investment standpoint. I would say it was actually more from an ideological standpoint, right? And I think many of us that were in this space fairly early had a distrust in the system, right?
What?
And I think later on, when it came to sort of the early ideation of the exchange in 2016, I think a lot of that was around, just struggles to get into crypto. We had already then been exposed and sort of been more involved, but anyone we talked to that was interested, it was just even more complicated, right? Like there was not really ways to on ramp at that point.
It wasn't great
easily,
back then,
right?
It wasn't great,
especially in Asia, right? So, like at least in this part of the world, like Coinbase was still around. Like if you were in Asia, like you couldn't even, every bank account was getting closed. It was just awful if you were doing anything in crypto, right? And so the whole idea behind it was, let's create sort of one, the easiest place to on ramp, and then two, actually work with altcoins as altcoins started, becoming more and more of a thing sort of at the start of 17 onwards. And so that was a big factor, because if you looked at, I don't know how many here were trading at that time, but if you were trying to trade on some of the other major exchanges, it was like Bittrex was sort of a big deal. If you were outside of like the Coinbase ecosystem, it would have been like Bittrex, which wasn't a great experience. Kraken, if you remember trading on it, like you couldn't put trades through. I would say like 80% of my trades failed on Kraken, right? So it was like that whole thing that we were trying to solve, right?
Yeah. And so with a lot of the altcoins, like how did you find, and I guess especially when it's when you're your own exchange and whatnot, like, and back then, like liquidity, how did you find with that, with like dealing with altcoins and whatnot? And was there like actual volume? Were people interested? Were they, what was that like?
So it was interesting because it was quite early, but actually, depending on how many people here were in the ICO boom, there was actually like pretty decent liquidity, and there was a lot of retail. It was very novel. Like, projects were raising, I'm sure many of you remember, like 30 million overnight, right? I mean, we had, quite a lot of projects that ended up raising like major amounts of money at that time. It was very different. Like, I think right now, if you compare it to the market right now, there is no retail. And like good projects easily kind of like, or decent projects, I wouldn't even say good, I'd say decent projects like easily stood out at that time. Still so novel. And so there was, I would say, like pretty strong liquidity, pretty strong retail early on. And then obviously very quickly people realized, hey, like most of these projects don't even have substance, can't build the stuff. That was a whole nother issue, and that came crashing down. But.
Yeah. Okay. Huh. Okay. Well, yeah, so then you were saying like after the exchange, when you sold it, like that's what led you to creating Founders Fund.
Yeah, so when we created Blockchain Founders Fund, it was quite interesting. So Mansoor, one of the other partners, so we both founded it together. And at the start of it was interesting, right? So basically exited the last thing, and then we were basically like, hey, well, instead of scaling one company, let's scale two. And instead of two became four in terms of supporting founders, getting involved. We look at ourselves as very hands-on with our companies, right? Which is very different from a lot of venture funds in the space. And a big part of the genesis was, we started off with a lot of sweat effort along with small checks into companies. Now it's sort of evolved where we raised an external fund. We raised 75 million a couple of years ago. We've been deploying that. So now we start off with a minimum of 200K per investment as sort of the low end. But that, it's evolved, but we always looked at this as we didn't really do this to be investors, right? Like to us, that's actually not even the fun part. The fun part is rolling our sleeves up, working with founders and solving just really big problems in the space with people that are, a lot smarter than us, right? So we're generally looking for founders that we can learn from, that are extremely brilliant and, the best in the world at what they do, right? So that's a big part.
Cool. What was the first project you guys supported? Do you remember?
So I mean, there would be some iterations, because I think I think in the early parts of BFF, it would have been like there was just a number of different ICO projects, right, where we got involved in very early, and it was pretty exciting. And I to be honest, it was probably more luck than skill, but most things I'd say that we probably touched at that point just blew up. But I think that was realistically like almost every company, like a lot of companies in the space. But we ended up having, more than a dozen plus companies raise 30+ million very quickly that we were involved in. And, of course, I think as for most of us also, they all came crashing down, or pretty much all of them came crashing down. And then fast forward a little bit, was pretty involved. If some of you remember, was one of the early advisors to Polymath, which, invented the term security token, and it was sort of Canada's probably biggest project at the time in terms of raise. And, I think there was a number of struggles there, but they've actually done pretty well now. They ended up launching Polymesh with Charles Hoskinson. I think I don't know what it's trading at today, but it's probably something like $1 billion or somewhere in that range. So that, that was pretty good. And, post that kept going. And, then we raised that external fund. We became one of the first regulated funds out of Singapore, which was pretty cool as a Web3 fund to work with the regulator, figure out and sort of be on the cutting edge. And a big part of that was trying to legitimize the space as well, right? Because, we could have done this easily out of like Cayman or somewhere else offshore, but I think a big part of this was, how do we legitimize the space? And we worked with the regulator for probably 6+ months or longer, actually. I think it was a year of the process, but we did a lot of calls over that period to even work with the regulator on how could we actually structure this, how could we do this, et cetera.
And Singapore seemed like the right place to, or the most like decent place to do it, or what was?
I think a big part of the idea was Singapore's open but strict, and it's very well respected. And so, like, while it wasn't the easiest place to do it, it was probably among the hardest places to do it. A big part of this was this will help to legitimize the space, and that'll also help us to differentiate in terms of like, we're not coming out of this as sort of like wild west. We're working on how do we actually bring this tech and how do we actually move things forward and how do we actually legitimize and like grow the actual space, right?
Yeah, gotcha. Okay, cool. And then with like, what are some of the traits or characteristics you're looking at with like projects, or when somebody comes to you, like, what are you looking at? What are some things that kind of tick your boxes?
Yeah, so there's a number of things. I mean, there's going to be like the standard ones, let's call it, right? So obviously incredible team. If I take that a little bit further, we do want to see very, very strong tech teams, right? In, virtually anything in the blockchain space. I mean, it is technical, right? I mean, you could say there's some caveats to that statement because obviously with like NFTs, like this kind of stuff wasn't really technical for a lot of it, but like we weren't also that interested in investments purely on that front, right? So, we do want to see very strong tech teams. We generally look for, teams that have had either previous successes or like very plugged in and very passionate and really know what they're building and have some sort of track record that we can see like how are they going to go build this and be the best in the world. One of the things that's maybe a little bit more unique, and this helps if there's any builders in the room of even maybe understanding how to pitch stuff to investors, is we look at, like, we would say the best metric for a venture fund to assess any investment is actually progress over time. And it actually sounds very simple, but basically like every investor is trying to figure out like how fast is something moving in as little time as possible. Because that's going to help me to understand like, well, what trajectory is this on, right? So, if you've built, and gotten to even beta or alpha, like you haven't launched yet fully, and you did it in a month, 2 months versus 3 years, it's a very big difference. And that's actually very important for startups to like showcase and try to show like how fast are you actually moving. And this is actually a pretty important factor for us. We do like founders that are coachable. That doesn't necessarily mean all of our investments are like that, right? But like to some extent, we know that this industry moves extremely fast. And like, it's also why we, to be honest, don't know even like which new major chains are going to win that are here today in 3 years or 5 years. And it's just changed so much. Like if you asked me, back in 2016, 17, what was going to win, we would have probably got a lot of it wrong. And in fact, we did get a lot of it wrong, right? Same thing if you went to that 2021 cycle, right? There's some differences in this cycle. And so I think a big part is like the ability to pivot, the ability to take advice, understand what's changing in the market, right? In this cycle, you've seen, for example, some differences. I mean, point farming is becoming a big thing, and I think there's some challenges with it. But if you're not following what's going on and not actually plugged in, you're just going to fall behind, I think, also pretty quickly.
Yeah, absolutely. And with some of these projects that have kind of come up, like what are some of the pitfalls you're seeing from these projects, or like what kind of, I don't know, early on stuff that happens to them? I don't know, any suggestions or advice, or what are you seeing?
Yeah, I mean, it's interesting, right? I mean, right now is a much better time, let's call it, right? Because if you go 12 months ago, what was interesting, I think from a venture standpoint, in some ways, like 12 months ago was really interesting because there was very little capital in the market, but there was a lot of incredible projects. What's happened, and like, so it was a lot easier to like filter. You were looking at like, sure, you might be looking at a few hundred companies a month, but really there was like 3-4 that stood out. And it was, I think, a lot easier for venture funds. What we tell our companies now that's interesting is, there's a lot of deals getting funded, right? So now out of the 500, 600 you might look at in a month, there's probably like 30 interesting ones. It's not even that they're fully interesting yet. It's just that like a bunch of funds that you also respect are also investing in these companies, and that you probably should pay attention to some of those. And so now what's difficult for venture funds is there's like 30 plus companies that are interesting every month, and obviously you can't be doing that many deals. And so this is, I think, a challenge, but it's interesting because for founders, it's a fairly easy time to raise, I'd say, like in comparison to last year. I do think it's pulled back a little bit in the past couple of months, but it's still relatively a lot easier now than, of course, over the past few years, right? And so you're going to see less of the cracks and the problems in this period because things are a lot easier right now in some ways. Like it's easier to raise. Diligence levels from a lot of funds aren't that high in some cases, right? Having said that, like where you will see cracks start is like as that bar actually goes up or if the market pulls back more, right? So as funds get more over deployed or, because like basically funds were pretty under deployed for the last year because they basically didn't deploy much capital for the last couple of years in the bear market. So as they get sort of full, like not fully deployed, but like adequately deployed or start getting to a bit over deployed, their bar keeps going up. So I think that'll start to show cracks where like, founders realize that like they're not moving fast enough and their tech is, there's probably 50 other competitors at this point that are doing the same thing if they're doing something interesting. Like, they might have founder breakups, which are pretty common in general in startups. I think these are some of the things, obviously like hacks, any of this stuff. And then we're seeing like, it's either one of the two, but either they're very weak on the technical side and actually can't build what they build, or they're weak on the marketing side and can't actually get people to figure out and use them because, they're not strong on that. That's where point farming came in, and I think like somewhat solved some of this, but I think there's still a big problem around it because like the quality of users is very low, and it's just people jumping to project, which has its challenges that'll start to emerge more in the coming months and years.
Yeah, the points thing has been kind of interesting to navigate. I mean, lots here of like seeing the whole airdrop farming that's happened from. I mean, even years ago, like last cycle, there was like tons of airdrops happening. So to see this showing up again, where it was like, oh, chase these things, let's chase that, but like literally, instead of having I guess just the hope, or the promise, it was literally like, here's metrics that we can actually, you do these actions, you get this number goes up, and you see this, and it's kind of a in real time response, so people can see this happening and maybe, I should put more, I should do this, do that. And anyways, there's been
you pair that with Eigenlayer. I don't know how many people are following what's going on with Eigenlayer, but and restaking, and it just, I think everyone's also getting like distracted by like the shiny lights, and you see projects now with 100, 200 million TVL super fast, or $1 billion in TVL or whatever, and it's not even fully real.
Yeah.
And I think it's concerning for sure. It'll probably still go on for a while, but I think it's probably a train wreck in the making over time.
Here we go. Okay. Yeah. I mean, lots of us have got some suspicions around how this is all going to pan out. And yeah, how do you keep capital around too? That's a whole other conversation. I think we've kind of discussed that, I think, a few times in the past during some of our panels, especially when we talk about restaking and DA layers and modularity and yeah.
I mean, another interesting one is even like now we're seeing some projects. I mean, some of you may know which ones I'm talking about, but even on like the Bitcoin ecosystem that are layer 2s that have high amounts of TVL, but the TVL actually never left the investors' wallets. So I'm like, I mean, this is pretty concerning, I think, right? To be calling it TVL and put up these huge numbers of what TVL is. And I mean, I don't know. It's that those things I think are a bit concerning.
Oh boy. Okay. So like we look at money, founder is like some, startups trying to create, looking to make a new project. Okay. Money equals good. They're always thinking, okay, there's money here. It's good. Let's go. With like, do you see examples of like money that can be toxic, or like, investment firms or, venture capitalists that can become kind of toxic or be parasitic towards projects, or like actually ends up being a downfall for them? Any examples around that, or, things where, or any kind of advice to startups to be watching out for certain things that maybe will reflect them or kind of act negatively towards them.
So definitely, I think there's kind of like two parts to that, right? Like a lot of money can be negative in a bull cycle where like some of these companies raise a lot and their burn just goes through the roof. And like, if you go and you take your organization from like 10 people to 100 people in like 2 months, like you no longer have a culture you're maintaining. You no longer have like proper processes, structures, like you kind of lose sight of what's going on. And like you see this in a lot of companies that are trying to scale way too fast. And I think there is actually challenges with that. And I think you see a lot of those companies like really get hammered when like the markets pull back. They didn't actually preserve and maintain like cash in a war chest. They didn't grow. Like you can grow fast, but there is still a challenge when like you can't maintain any culture. You can't control any of that. Like it is going to develop and it's going to develop on its own and you're not going to control it and be able to like structure it and own it. Right. And so that is a challenge for management then. On the other hand, I think in terms of like quality of investors, I think there's like a few ways that I sort of put this, right? It's like, if you think about like the ideal investor, right? So you're like A+ investor, it's going to be someone that obviously gives you capital and then can like open up a ton of doors and be super helpful, et cetera, right? And that's kind of like what we strive for. But if you were to go out to most VCs, like that's actually not a big focus. Like how many VCs are focusing a ton on actual portfolio company support other than just like asking what their burn is and how much cash they have and maybe making like one intro here and there, right? Like it's not that common. And so like then if you were to take like, I don't know, your B+ or A- investor, it's probably someone that like gives you cash and leaves you alone, right? And like if you know what you're doing and you know what you're building, well, like here's the cash, go do it, and like call me if you need anything. And like that's actually not so bad. And then you go down and you go to your like C+, or maybe it goes to like D or F investor, and these are going to be investors that like continuously bother you for stuff. They're probably asking what in your TGE is like every week and keep like not really helpful, not opening up doors, and they're just like adding like random requirements, right? And they're kind of coming in the way, or in some cases like just like not helpful at all, right? And I think this is actually fairly common in the Web3 space because I think a lot of the investors are maybe like less sophisticated. They've spent a lot like less time figuring out how to structure things to support companies. And I think this isn't great. And so like one of my recommendations to most founders is actually like when you actually have an investor interested, go find one or two of their portfolio companies and go ask them like, how have they helped you? Have they been valuable or any of this stuff? Because it does make a big difference if they're value add or at least if they're not negative.
So aside from, you're saying like doing help with intros or, support with certain things, like what are some other other characteristics or other things that you guys help with or you like to see other VCs help, projects with? Or what are some good things?
I mean, I can give you some examples of like what we do, right? So for example, with every single company, like we have a set of minutes, we have action items that are color coded. Every time we get on a call, there's minutes, there's action items, and then like we go tackle this stuff with them, right? Like we also have a number of team members that are fully focused on supporting our companies, right? So we have our own processes, but basically like when they're pre-fundraising, so if they're before fundraising, we want to get them up to a level to be ready to fundraise, we have a 90-step process we share with them, right? And there's literally resources attached to every single piece. If they're pros at certain things, they can skip certain parts, right? But like we want them to be the best in the world when we go out, right? So take like your deck. Like we went through a ton of different pitch decks. We took the best product slides, solution slides, traction slides, etc. We share them with our companies. We're like, make sure we're at this level. We tell them to even upload it to an AI tool after to get some feedback, send it to some friends, upload it to an AI tool called pitchleague.ai. It's more of a fun thing. You get a score, gives you some feedback, then send it to us. We'll give you feedback. Then you go to like data rooms, right? How do we have the best data room in the world, right? Like what you don't want to do is get on a bunch of calls with investors. Like if you have a good enough pitch deck, you'll get calls, right? So pitch decks don't raise money, right? It basically gets you on a call, right? So you send a pitch deck to someone, they're like interested, they hop on a call. So then the next part is your pitch, right? So then we basically get our founders to practice 11, 30, and 90-second pitches because we think that pitches are basically modular, right? So if you can nail your 90-second and you know the one sentence on why your team is the best in the world, why your product's the best, why now, what your solution is, like all of these pieces as like the best one-liners, that's essentially what goes in when you're pitching your company, right? And you get to your team slide and you say your one sentence on why you're the best team in the world, and then you dive a little bit deeper if it's a longer call, right? And so we get them to do that. Then like, once you get through that call, then you go to like your data room, right? So we want our companies to have very strong data rooms. So we spent 3 weeks basically figuring out how to build the best structure of data rooms. And then we basically built a structure where like there should only be 5 folders. This is exactly the naming convention of basically every file in the folders. These are the exact files that go in. And then like go do that. So if they get all of that ready, then it's very easy for us to go help them, because then when we go to the next part of the process, it's actually helping them fundraise. We coordinate with about 310 VCs on a weekly basis. We do 60 recurring calls a month with other VCs in the space. So like we can actually push good deals and get other VCs interested in it as well, especially when we're going and writing more money into these deals. And that's going to be very helpful, right? But we can only do that if they're nailing the pitch, they're nailing like the pitch deck, the pitch, and the data room and all the materials, right? So like they generally will have to have some experience fundraising or take this process very seriously to make sure that they're the best when we do it, because we don't want our companies like dropping off in that process, right? And that's just fundraising. So then when you come to like things like even like marketing strategies or different things, like Mansoor, which is one of the partners on the fund, he previously sold a marketing and branding agency. And so he gets involved on like how to actually fix some of these things with our companies. But our founders also have a lot of experience, right? It's not like our CMOs, et cetera. Like they're all very strong. And so it's very quick for them to like, okay, pick this up and like, let's go, right? And then we've got about 150 corporate partners that support our companies. So these are like, we're tier 1 partners, everything from like Amazon, Google, Twilio, HubSpot, et cetera. So we got a lot of like discounts for our companies. We have an expert network that consists of like Fortune 500 senior execs, fund managers, successful entrepreneurs, some of them with multi-billion-dollar exits. We got about 350 in this network we've been building over the last 6+ years. They support our companies. So there's all of these different things. We've even got a full-time general counsel on our team. So, you know, what we found is a lot of early stage startups spend way too much money on legal. And if anyone's worked with lawyers here, we're not big fans. They generally waste a lot of your time. They run you in circles. And so we're like, let's cut all of that, right? So we basically have like pretty much standardized contracts for that our founders will need, or most of the things our founders will need. And then if they have questions, they can just go to our GC and ask questions, right? And it just saves them a bunch of money. It saves them a bunch of time, right? Even for stuff like structuring and like, you know, if they need to launch token entities, stuff like that, we've like streamlined everything to be extremely cost effective, extremely fast. So this is kind of how we think about things so that we can actually like scale effectively to support our companies.
Yeah, that's interesting with the legal side of it, because yeah, we hear there's a lot of bogging down that happens with all of that. And it always seems like very gruesome and tumultuous, especially like when you're thinking about maybe our friends down south and everything and trying to accommodate for all that. So yeah, that's cool that you've got a lot of those kind of things in place. So hopefully that can help others understand some good ways of finding support and whatnot. What are some of the things that are hot right now? What are you seeing? What's kind of trending? What's exciting? What sectors are exciting right now?
It's a good question. I mean, I think memes have all the retail investors.
Do you have any special memes that you're close to your heart?
So, I mean, there are some. I mean, out of the fund, it's a little bit complicated, right? Like, I can't really go to our investors and be like, guys, we're going heavy into Uranus tokens, right? Like, it doesn't fly so well when we've got a lot of institutional investors. You know, we've got financial institutions and telcos and like major family offices out of the U.S. and Asia, et cetera, in the fund, right? So, that one's a little bit more complicated from a fund perspective. But if you were to look at areas that I think are quite hot that have huge potential, you know, I think the Bitcoin ecosystem has been particularly hot right now, especially anything on like layer 2 stable coins and Bitcoin, et cetera. Like I think have been like pretty interesting spaces. We'll see kind of, I think there's very differing opinions on how this really emerges. Like, can Bitcoin eat a lot of, you know, the existing pie that's there from Ethereum or not? Right. And I think kind of that's the question that I think everyone's grappling with is to what extent does that happen? To what extent does DeFi happen on Bitcoin and not Ethereum, et cetera? Right.
Yeah. So I don't know if there's anything else that you want to like share as other things that are hot, because I wouldn't mind actually getting into the whole, you know, kind of Bitcoin, you know, let's call it the layer 2s of Bitcoin and the programmability level rather than just, you know, the current ones right now. But any other sectors before we dive into the Bitcoin side?
I mean, Deepen's been particularly interesting because I think it's one where actually a lot of retail can come in and it actually does make sense, right? So decentralized physical infrastructure. So if you take anything like, I mean, even if you think about, for example, like the advancement of human society now, you could probably graph the future advancement of human society to the training of AI and how much AI continues to advance. And then if you're looking at how do you train AI more effectively, it's probably more access to GPUs. And if you think about what is like the biggest, set of GPUs in the world, it's actually the GPUs that are unused, right? It's basically the GPUs in every single household and computer that's just not used. And like, can you bring that all together and essentially bring everyone's infrastructure together to create something more effective than the world's biggest supercomputers? And that's kind of the idea behind like Deepin. And there's a lot of other things you can do it with, whether it's like bandwidth or all sorts of other things. So I think Deepin's interesting from that perspective. I think there's a lot of challenges, technical challenges. I think there's challenges with latency and all sorts of other things depending on like what solution you're working on. We are pretty interested in RWAs as well. We placed in a number of bets on that part, a little while ago, and I think that's gotten a lot of mainstream, I'd say, like visibility, like with BlackRock, etc.
Yeah, Uncle Larry, he's excited about RWAs.
There you go, right? And then I think that opens up a whole number of other things. Whether that's like derivatives that then lead off of that, or perps, or like all sorts of other stuff that sort of are linked to all of that. So those are a few of them. I mean, there's a number of different things on infra we've been interested in, like tooling. We've been still interested in certain things that are solving big problems for developers, etc.
Yeah, cool. Yeah, with tooling, like what sorts of things for like tooling wise, like when you're saying they're helping developers, and like what does that look like from an investment standpoint? I guess it's kind of just showing up now here on this question.
I mean, I can give you a really cool example of a Canadian company that we backed, right? So there's a company called Uniblock out of Toronto, and they're basically a unified API for crypto. And what we realized when we started making all these investments in startups, and then we're talking to them on like what they're building, what they're focused on, like basically we realized like half the people are spending all their time just building the same stuff, right? So it's like, imagine you do anything with trading as an example, okay? As a startup, or need to plug into any data related to trading or crypto prices. So what a lot of these guys are doing is like, you'll plug into like multiple different data sources or multiple exchanges. Let's say you need to plug into a bunch of exchanges, right? So now you go build out the API for 12 different exchanges, like the 12 leading exchanges in the market, right? Now, let's say you go build out those APIs on each of them for your product. Well, then the next company doing it, they're doing the same thing. The next company is doing the same thing. And then let's say those exchanges update their API once a year. Well, if each of those exchanges update their API once a year, that means basically you have to do 12 API updates. So every month you're basically updating one of those 12 APIs from one of those exchanges. And so now you've basically got like half an FTE basically updating like APIs every single one. So like Uniblock's basically built a unified API with all the top tools in crypto, and then any company can just plug into it. Basically speeds up everything for developers. One click of a button to turn on basically any of these APIs now. And it's just way more efficient, and it works a lot better as well if you're trying to build products with really high uptime. If you're trying to push like 99.99% uptime, well, you're going to need something that builds in redundancy and that has all of these different things integrated. And so that actually ends up working really well for institutional as well if you're trying to build like that grade of products. So that's just a cool example of like a Canadian company.
Yeah, cool. And that's good to hear the Canadian as well supporting the local homies. So perfect. So let's dive into the Bitcoin L2 stuff. Now, a lot of that we're seeing, I guess what I'm seeing is, we're looking at EVM compatible solutions here, as compared to, let's say, UTXO based, like we're familiar with like Lightning Network and even Liquid. Some people won't even really call that. They have like reservations about calling those whatever. But yeah, with all this new stuff that's coming up, there's a ton of them. So what are you seeing with this? And I guess, just kick it off here. What are you seeing so far?
I mean, it's complicated. It's saturated. There's a lot of players. We're tracking 136 layer 2s launching on Bitcoin.
So there's over 100 L2s
that are launching on Bitcoin.
Not just apps. You're saying L2s.
L2s.
What? I had no idea it was this high.
It's crazy right now. I mean, there's going to be like 5 or 6 that probably most people know or are seeing and tracking, but there's a lot of stuff launching, and to be honest, a lot of them are raising a fair bit of money. I don't know. It's crazy, like just how many are launching. It's going to be very saturated very fast.
Right. So what sorts of things do you see that are going to keep like these Bitcoin L2s? Like, what's going to make these good, do you think? What sort of things do they need to like attract, or what needs to be like technically, or where do they need to find it in their, like, to become the right part, PMF for this? Like, what do you think is going to be the winner in this?
It's interesting because I think so the maybe the funny part about, let's call it like the whole Bitcoin layer 2 part, is that everyone's like, okay, we're going to go capture all of this like untapped funds, all this untapped Bitcoin from all these, OGs in Bitcoin, whatever, right? And so all these people, all this money is locked up. And then you have all these layer 2s, and like most of them aren't even plugged into any of the Bitcoin ecosystems, which I think is a pretty big problem. So like some of them are pretty good at branding and stuff, but like they're not really plugged in. So if you talk to a lot of the people in like the Bitcoin communities, I mean, they're split on a couple of them that they do like, but for the most part, a lot of them I don't even think are necessarily going to plan to use any of these for the time being until they see maybe some like major movement, right? So if you can unlock like major yield on Bitcoin without increasing the risk, like that could be interesting. To be honest, there's probably always going to be certain new risks that emerge, right? And so that's going to be, I think, a real question mark for a lot of the Bitcoin holders on, are they going to go push this or not? But I do think it's challenging. Like, I think some have been pretty good at marketing. I'm sure some of them I'm sure you've all heard of like BitLayer and stuff like this. That's sort of probably right now doing quite well. Like Merlin's got a ton of TVL, etc. But BVM is probably one of the most technically advanced ones, but I think it's still a challenge with a lot of the Bitcoin community not really being excited about it, because like that's kind of what they're selling, is they're saying all of these Bitcoin people are going to be in it, but I think there's a disconnect.
Yeah, I feel like a lot of that liquidity is still like wrap Bitcoin or TBTC, between one of those two assets is kind of primarily what we're seeing, and to me that's still like very EVM-ish. So in a lot of ways, I feel like these L2s are pulling more from like the Ethereum side of stuff versus like, actually pulling in this, the native OG Bitcoin to come in to use this programmability. And a lot of those, if we look at certain Bitcoiners, the laser eye maxis, let's call it. Actually, I wanted to start calling them the laser eye minimalists, because they're using Bitcoin at a minimal level and have, jeez, Louise. Anyways,
I do think there's been like a pretty heavy push on like some of the Bitcoin side out of Asia, right? So I think a lot of the trend also started out of Asia.
Yeah, I heard like a lot of people interested. Like that's where I first saw like, okay, people are crazy about ordinals. They are, excited about runes. Like having, okay, this is like, these are luxury digital assets. So that's where I first saw that too. So, anyways, carry on.
Yeah, and so I mean, now it's interesting. Like, Bitmain, which is obviously biggest on sort of the mining side, biggest on mining equipment, etc. Like they've only backed one Bitcoin layer 2, which is BVM. Okay. And so that I think is quite interesting. We've also invested in BVM. But that could be a lot of firepower, a lot of, around that particular layer 2. I mean, I think a lot of the other ones, it's just, are they going to be able to get the TVL, and how much of this is like a game where it's, a few people that own a lot of TVL and they're going to play musical chairs and move it between protocols, which, is pretty common, right? So
what do you think about like actually getting like native Bitcoin, like the bridge? Because that's a big thing too, is like, how are we actually bringing this liquidity in? What do you see for like technical side? Maybe this is a little bit too technical. I don't know here, but like, as we're talking about it, getting native Bitcoin in a trustless way into these ecosystems. Are you seeing anybody that's doing that doing it best or doing it right, or certain ways of doing it?
I mean, I'd still say it's early on the layer 2 side. I mean, most of these layer 2s haven't even like properly like fully launched, let's call it, right? And some of them that have, like I was saying, like the TVL is not even fully legitimate, or at least parts of it. I think there's still a number of other parts of infrastructure that also need to be there, right? But I think it's early on that part.
And what do you feel? Do you feel like it's going to be able to? Is this going to steal more away from the Bitcoin DeFi aspect, or the Bitcoin layer 2 narrative? Is it going to start stealing away more from Ethereum? What do you think? What's your kind of thesis, or what are you guys, I guess, hedging for, protecting for, thinking about, or what do you think?
Yeah, it's interesting, right? I think as a venture firm, right, like we're basically in the business of like trying to find those like 1000x opportunities, right? And so if you think about it, there's kind of like two parallel worlds, and like at the end of the day, like we're not psychic, right? And so like there's two parallel worlds. Like one world is the Bitcoin side crushes it, and then actually consumes a lot of the Ethereum DeFi community into it. And how likely is that? I don't know. Is there some reasonable percentage? Probably, yeah. Right. And so like that's where we placed, a number of bets in that Bitcoin ecosystem, specifically because like if that happens, it would be, astronomical in terms of size of what happens to a number of the players on there. I think some people that have some pretty bold predictions. I think some people are thinking there'll probably be a Bitcoin layer 2 worth, in the 100 billion range. I don't know if I fully subscribe to that yet, but, I do think that there's probably some reasonableness in like one Bitcoin layer 2 getting to some very high amount. And then obviously you'll have a few that are, probably a fifth or a tenth of that, et cetera, right? In the other world, obviously, like it's Bitcoin doesn't succeed in terms of capturing that, and Bitcoin DeFi doesn't become like a massive factor. And in that case, like we obviously have a lot of bets across Ethereum ecosystem and across like other layer 1s, et cetera, right?
Gotcha. Okay, cool. Who's got some questions from the audience? Anybody have anything? You can open it up, and if there's any, take a look if there's anything online too. Whoa, hello everybody on X. If there's, we can take a look. Is it working?
Seems to be.
Perfect.
Okay. I was looking at this site I just found that's called Bitcoin Layers, and they seem to be people that are very favorable to Lightning Network. Like they've come up with a rubric for judging these things, and they, it's probably not a coincidence that Lightning somehow satisfies all of their criteria, and it has like the green light and no risks, despite the shortcomings that we all know. But I'm wondering, like, are there any? I think that we can call that one an actual Bitcoin L2 in that it settles to the layer 1. Are there any others that actually do that? Because they all seem to be like side chain ish. Are you aware of any that we can like firmly call, even if they're not built yet, they have a design that we can firmly call a layer 2? That's my question.
It's actually a good question. We were just talking about that before this whole thing on a lot of these, what everyone is calling Bitcoin layer 2s are primarily actually side chains. Yeah. And a lot of them are promising that they're going to move in this direction, actually properly become layer 2s. But, I think that remains to be seen. So like, I think you're right in that clarification, although I would say the general market doesn't see what you just saw. And I think there's probably even a lot of confusion around the whole thing. I think the EVM compatibility is a big deal though for like the layer 2s, and that's probably where they're getting, or like that's where a lot of the existing Bitcoin layer 2s have a lot of hype around, right? It's that EVM compatibility.
We're all EVM fans here, I think. I can say that. But yeah, just I'm just interested in these designs and like how many different types there are, because this site is like categorizing them and by the risk, and I'm just wondering, is there anything other than sidechain that you're aware of that can exist besides well, we're considering like the state channel approach of Lightning to be like a little outdated, or like it just seems like there aren't those primitives available in Bitcoin to date, and that's why there's all these proposals to add new opcodes or flip on old opcodes. It's like I don't think anyone has like gotten the
I think you're right. I think it's early, right? I think the Bitcoin ecosystem is just going to evolve a lot in the next year in terms of innovation, and then we'll see what happens, right? I think there's just, like I was saying, there's 136 layer 2s that we're tracking. I don't know that specific site, but like internally we're tracking 136, and we're just like,
no,
this
it
is very
not
saturated.
even close to that number. Like
I don't even think we have all of them, to be honest.
Yeah,
I'm sure there's even a lot more than what we're seeing.
So one of the, I just want to know which ones of those have like an actual, layer 2 thing, and then I'd be interested in those.
And I don't know if we've got anything, because I think we need the opcodes. The opcodes need to come into place on Bitcoin in order to get that to happen. I think
that's what I suspected, but I'm not sure. I'm not an expert in that area. All right, thanks.
Okay. Do you think, what about the opcodes? Are like ZOPCat or Covenant CVT or I don't know, BitVM? I guess that's kind of a whole different thing. But any of those, do you think there's going to go through, or any of the circles you hearing that are going to say these are happening or not happening?
I mean, I think it's interesting. Like we're tracking a lot of it on our team, and I think there's a lot of changes that need to happen as well, right? I think it's just hard to know like what's really going to take off with how many are in the market and how many, like there's all these little different iterations on tech from all these different players that we're tracking, right? And so, and then I think part of it is like the technical aspects need to win, but then the other part is like, well, what is the Bitcoin community back, or like, what is Bitmain back, or, this kind of question, which is really not necessarily linked fully to the technology either.
Yeah, got it. Well, if there's any Bitcoiners listening right now, please chime in. Want to hear from you. Maybe we can get an answer or something. All right, go ahead.
Hi, thank you. What's your highest conviction thesis for the next year or next cycle, whichever comes first?
Good question. I don't know if I'd call it like highest conviction, because I think the way that we look at it, so internally we've got about 25 open sub thesis where we think there's major problems in the Web3 space and no market leader in those areas, or like opportunities for like a beachhead to sort of, grow in those areas, right? And for a new emerging like leader. And so, I'd break it down in a different way, like, because we'll go back companies where we see like major problems, right? So, for example, we recently backed a company called Emoja, which is basically doing like liquidation protection in crypto. And everyone sees how much liquidations there are, every day, every other day. I'm sure you guys see like how much liquidations are happening in crypto. And at the end of the day, if you think about like real use cases for crypto, there's like kind of only a few things, right? There's kind of like crypto trading, GambleFi, you could call it, right? You probably have like memes in that category that kind of have product market fit. Like probably a lot of the other stuff, like still not fully emerged in terms of like what that looks like, right? And so there's a lot of then things with like small product market fit starting, but I'd say it's still early on a lot of these other things. So there's a bunch of different categories, right? So that's like an example of like trading tech, let's call it, or stuff to make it better for traders, which is one of those thesis where we think there's an opportunity. There's all sorts of other stuff that we have. So we've got like a category that we invest in that we sort of call like Web 2.5. And this is like, how do you bring like Web 3 into the real world more effectively, right? So I'll give you an example of that, just so you get an idea of like how broad it is. And with 180 companies, like you'll see that it gets pretty broad, right? So, we have a company called Petastic, for example, that's putting pets on chain and literally creating pet IDs. Now, that might not sound that interesting, but anyone that's a pet owner probably knows that like you probably need like vaccine certificates, and those are generally on paper, and that's difficult. And if you need to travel with your pet, it's like a complete headache if you try to travel with your pet. And so like actually creating like a database on blockchain that has pet IDs is actually really interesting and really valuable. And so they've put in over 1 million pets on chain in the last few months. And that's actually quite cool. And it's actually being used by all sorts of players. Nestle just invested, Mars just invested. So the two biggest pet food makers in the world now are getting involved with the company. And so there's things like this that I think, it's way out in left field probably from some of the other stuff we were talking about here, but there's like huge opportunities for just tens of millions, hundreds of millions of pet owners to actually get into that. And if like something like that really takes off, it's kind of bigger than a lot of these other things when you think about how many people it's impacting, right? And so that's like the challenge when you're like, what's that biggest thesis? It's like, well, we've got a bunch of different ideas that like we think could transform the space. Some of them are going to be more like hyper crypto native that are going to be around like trading or infra or like stuff like this. But then there's stuff of like, well, how do we actually transform the world and get them using blockchain? And it's going to be stuff like that.
All right, so we're bullish on trading platforms. And then, sorry? And then pets, pets are, they're RWAs. You're right, RWAs. All right, any other questions? Final? Anybody else? Anything? Do we have anything from online? Oh. All right.
Well, how close are we time? All right. Yeah, because I don't have insight into this world, I'm just very interested in what you think about, when you invest. Do you prefer this kind of like token, a token generation event in certain terms and like a vesting cliff for this, like what we all know happens, and we never really like see the fund selling, but they're, obviously they have to exit at some point. I'm interested in like what you think are the terms for like a successful exit or like a preferable stake in these Web3 entities at the moment. Because I'm starting to think that, maybe it's actually just equity and not tokenized stuff, right?
So this is an interesting question, and we've been burned from this a lot over the years. So we've learned a lot.
Okay, good.
So what you saw in the 2017 cycle was it was token only, right? Yeah. And then we got to like 2020, 2021 cycle, and like, it was like, again, mostly token. People were doing equity, but again, it moved pretty heavily into like mostly token. And what happened that was interesting and that was flawed was like, some of these companies had really good tokens, but like either the token didn't launch or it launched and then like went down, whatever, because markets fell off a cliff, et cetera. But then the business ended up surviving and doing really, really well. And that happened on the equity side. And so a lot of people got burned. So a lot of more legitimate funds, and what you're seeing in this cycle is they're not doing that anymore, right? So even for us, like, if they're like, I basically want the same incentives that the founders have. So the founders have equity and token. Like, I want equity and token. If they just have equity, we'll do equity. If they just have token and it's a proper DAO and proper governance and stuff, like if that's the plan, like we're good to do token, right? As long as we're aligned, like we're okay with that. The vast majority of deals realistically right now are equity plus token warrant. Having said that, like, I do think that, one, there are a lot of companies that probably don't need to launch a token that are, which is always going to create an issue. And I think part of that happens with the hype cycle. The flip side of that is there is actually massive benefits to launching a token. And a lot of people don't realize this, right? Like you can actually drive like essentially like major negative CAC or like zero CAC acquisition. And like we've done it even on some of our companies where we've been able to like 100x the users, 1000x the user base with essentially like not a lot of cash because of the token and actually aligning incentives, and actually been able to maintain that even through the last bear cycle, like massive user numbers. And Lunar Crush is a really good example of this. If you're familiar with the tool, it's one of the best like sentiment analysis tools in crypto. And like they were able to maintain something like 500,000 users every single month in the bear market, right? And so like, and that went from like
they're issuing token, like
not because they're issuing, but I think because they aligned interests and actually built a token where like their community was super involved, they could earn tokens doing different things. But like I think they built an interesting ecosystem around their product that actually worked, and that actually was able to keep users there. Like I'm not a fan personally of like all the airdrop stuff we were talking about at the start, because like the problem is it's not aligned with the product long term, right?
It's mercenary. It's mercenary.
It's like it's my problem with staking as well. People are like when you ask someone like, what does your token do? And you're like, you could stake it. Like staking is like not a good thing, right? Like in a lot of ways, it's like I'm kicking a can down the road. It's like, don't sell 2 tokens today. I'll give you 10. And then you can sell 12 tomorrow, but then don't sell 12. I'll give you 100. And then it's like, well, don't sell 112. I'll give you like 1,000. And then it's like, don't sell 1,000. I'll give you 10,000. It's like, this is definitely a train wreck also, right? And it doesn't actually work that effectively. Like, sure, it can be one part of like a grander part of your solution, but a lot of projects, like that's the extent of their tokenomics, and that's a huge problem.
Yeah, and I think something like with new projects, as compared, probably like not with Ethereum. With Ethereum, I think like this is actually securing the network, and we're changing, tokens deflationary in, depending, I guess, on the burn rate and whatnot. So a little bit different there, I would say. And but yeah, with actual tokens and just like staking and do this and do that, like I always say to people and they're like, oh, well, Cardano, like most people I know with Cardano, they either hold it on a SEX or they're staking, and that's like it, So
I think with staking, it's sort of like you need to stake to not be diluted by its natural issuance in some way, and then it depends on whether you have like a lockup or an exit, a withdrawal queue from that, like on Cosmos, where if you think it's going to be the time to like get out and dump, you're not going to get it in time. Whereas I actually don't know with Cardano. I've been staked for years.
Yeah, I don't know. I forget how that all worked.
Yeah.
I remember looking into it years ago and tried to get it going, and it just didn't work. So I just gave up. Anyway,
Not gonna
all
make
right.
it.
Anybody else? Any last questions? Anything from online here? Buddy just sent and said that there was a new Bitcoin roll-up that just launched, while we're talking. Like the Medium article dropped just now. So, what amazing. 337. Yay!
There you go.
There we go. All right. Okay. Well, I think that's great. Okay. Perfect. Round of applause here for everybody. Okay, and once again, just a reminder that your PO app is available on the end there. Just tap it and then enter in your Ethereum address, your ENS, or your email address, and go from there. If you don't mind, just fold up your chairs and feel free to just stack them up behind the door, and feel free to stick around here for a little bit. Okay, thanks everybody.